Good weekend, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the weekend of Friday, the 17th of February, 2023. Remember, it's President's Day weekend, but in the futures markets, we do open again on Sunday night in many of the markets, not all, many of them. They'll go until in the morning, no longer than noon. They'll close down, then they'll reopen at 5 in sequences. So some won't reopen on Monday night. They'll reopen Tuesday morning. So I sent out to all of the people that are my subscribers and clients. They have those hours just to bring you up to date. You know, just when you think the market's ready to capitulate one way or the other and say, hey, the inflation numbers are so strong, you get some markets that are just saying, hold on, maybe things aren't that bad. And that's what seems to be going on. This battle just goes on between the naysayers who think the Fed will not go as far as earlier thought. Although I must tell you, there's a new school of thought that thinks a minimum now of 2 rate hikes coming, possibly 3 if the data stays this strong. I'm going to pull back from that. I have been in the camp that thinks that there are 2 rate hikes coming. I think that you've got baked in the March. But then I'm not certain what goes on. What if, just what if, the market all of a sudden really takes a nosedive in March? We're only in February. And by the time you get to the May, remember, the May meeting, you may have a different world. I think you have to have an open mind to the data dependency that these markets are going to have. These naysayers, nah. The people that are just saying, oh, they're going to keep going forever, you don't know. I will say this, and I go on record. If the data stays as it's been, that's pretty easy to see. If it stays as it's been, the Fed goes a minimum of 2. If the data comes in as it is, doesn't wobble and gets a little stronger, then I can see the 3. But that's over that period of time. Between now and then, we've got a lot, and you have to treat it as such. Don't lock yourself into a mental, oh, it's going to do this or it's going to do that. The Fed has told you they're data dependent. Now, if we take a look at the E-mini S&P, one of the things I've been saying is, as we've been coming up, and this began back here. And if we take a look when, I think it's so important. We bottomed out in the markets, and this is on a monthly basis. You bottomed out September 30th. That doesn't mean you're trending up. You're working your way higher. You can see that. If you continue up, the 4186 level on a monthly chart seems to be where the market would run into big resistance. What has happened on the weekly charts is the market has got up and is holding there. So that's going to take us to the daily charts. But before I get to the daily charts, I want to discuss with you one thing, and then we'll finish up. This is President's Day weekend. I am offering a 50% off price on any of my research, not my courses, my research. What does that mean? The morning subscriber video, the morning ETF stock subscriber video, the combination of the two, and or the combination of my twice daily written reports, which also include special updates as they come out during the day. And we had one of those happen yesterday. It turned out to be a great one to have, with the morning futures. You can either get 50 off on a monthly one time, or you can go for a yearly and get a real bargain for that. Your call. Go to iraepstein.com. Under the word research, it's all set up for you. You can move your cursor up here at any point. Give it a click. It'll take you right there. This will end on President's Day, so come Tuesday, don't look for it. It's not going to be there. All right. So as we take a look as to what you see, you've come up, and for the past 3 weeks, you've done consolidation. You can see that on the weekly chart. The pattern is one of a lower low and a higher high. You came down. You get excited to the upside again if you get over 4208.50, and you remember that would correlate. You'd be looking then at the monthly chart. Can you get up into that 4186 at month end? Month end on a closing basis. There's a very big difference between getting to the high, where you're going to finish the month. That's what's with that month chart. When you take a look at the resistance, you're there. It is the 100-week moving average. You see it right through here. The support's back at 39.67. The resistance comes in better with the Bollinger Band. So the combination of the Bollinger Band and the 100-week average is offering that resistance level. And if we stop right here, we have the bias up, bias because the market is over the 18-week, and I define bias as the relationship of price to the 18-week. If it's over it, the bias is up. If I got sell signals above the market and the bias is up, I don't take them. If I get buy signals and the bias is up, I do take them. But would I ever tell a client to buy into a 100-day average in a Bollinger Band? Not going to happen. It is typically not a good idea to do that. The market, yes, if it's going to break out to the upside and run dramatically, it has to break through that. Do I think this is the condition that's going to happen in? Number one, I don't. But as a chartist, prove that it's going to do that. And so far, you haven't done that. In addition, you're overbought. Now, overbought in the slow stochastics I define is any reading over 70. If the numbers are both going sideways over 80, then it's bullish, and you normally get a market that goes with that until the momentum turns back down. Well, all you've done here is get overbought into a big area of the 100-week average in the Bollinger Band. That is where this rally, in theory, has run into its brick wall. Now, the question is, can it roll over here and do anything? And that's going to be the biggest question. In the Dow, we have been just running against the 100-week average. It's just so clear to see. Now you're coming to the culmination where the market's at the 18-week average, the 100. And notice what's happening with the black lines. They're wrapping their arms around the market. Momentum has turned down. The market goes into a failure mode and into a bearish posture. If the market can take out this 33,543, close under 33,519, the 18-week average down here. Until that occurs, the market still could make a run for wherever that upper Bollinger Band is. The battle's on. Now, who's going to take control of this market from here? In the NASDAQ, the battle ran into the brick wall again at the upper Bollinger Band, and those bands have narrowed in. Look at how wide they were here and how they've narrowed back in. You're overbought up there. In order to say a corrective mode is going to come off a weekly chart, you have to take out the low of last week, not this week. Now that low, so we can see it, turned out to be 12,243 and a quarter. So you need to take that out. Then you can begin the pattern of lower highs, lower lows. But what's the interesting factor here? In all the stock indices, and the word is all of the stock indices, they're above the 18-week average. You've got to get under them to get bearish. You haven't done that yet on a weekly chart. The Russell fits right into this. What you had here was a market that had higher lows. And now you've got even another one. That's why I left all three arrows for you to see. But if you take this out, and I'm talking last week's low, just like we just looked at, that could set up a challenge coming back here. If you go up, you have big resistance between the Bollinger Band of 1992.70 and 2035.80, right up into that area. So what could be the things that set the market higher? Well, what would set them higher is falling inflation numbers. Do we have any that are really important, though, between now and the end of the month is what you got to look at. You've gone through an awful lot of the numbers that are saying just the exact opposite. Those are the things to look at and look at in a very careful way. We'll get a lot more Fed speak, too. So the Fed members will be running out. So far, each Fed member that has come out, not one has deviated. They are shocked. That's the right word. They didn't expect. That's the right word. Labor to stay this strong. They think the market's out of balance in the labor. They can think what they want. I'm going to point out that the service sector is what's so strong, and we're going into spring months. The service sector for outdoor activity is going to pick up again, not go down. That's another thing you got to think about. The 30-year bonds is not the message. They have rolled over into a bearish posture. The question is, can they make it down here? The trend is down. The bias is down. it's all systems go if it wants to keep dropping here back to a new low. I have my doubts. I don't think we're that bearish at this point. I can understand the curve yield making a move. So yes, I think there's declines. And I think that you be careful where you sell the market into a hole. This is not the hole, and we'll see what happens from there. The 10-year note, well, that's going to get more interest, and it too is fully bearish. Lower highs, lower lows. If momentum goes, you're coming back here. Would I fight the tape, as it's called? No, if the market wants to go there, fine. I don't see anything screaming on bonds or notes that you want to be on the long side. And on the dollar, as bullish as the dollar is, and it has come back for the year, and it's coming back up, and it's flirting with not being negative anymore, higher lows, higher highs, but under the 18-week average at 105.15, let's call that. So the resistance is just above the market. The daily charts don't look like this, but the weekly charts are giving you a very different picture as to how things are doing. And in the euro, you're coming down. You lost the embedded reading. And let me define that for you. If you've taken my enhanced Bollinger Band course, when you get a bull like this, you're looking to buy breaks, looking for the higher highs. When you lose the embedded reading, like you just did here, and you lost it last week. This was the week of the 10th. This is the 17th. You normally end up making a run for wherever the 18-week moving average of closes is. That's what I think is happening. So I can see the euro a bit lower, dollar stronger. But ultimately in time, I think that you will find the euro finds its footing, probably down in this area. Okay, I'm not advocating a buy. There's no buy signal on that chart the way I chart. In the Canadian dollar, you've gone into an area that is turned bearish. I'm surprised myself. But lower highs, lower lows that close under the 18-week average, target the lower band, momentum down. You negate that bearishness if this week's high is taken out of 75.35. It's an outside week down. If you come back up immediately and take out that high, game over. I think the pros are going to sell this market short, looking to see if it can come down. The currencies are saying the dollar reigns supreme for the moment. In the Japanese yen, so this whole move of talk about the yen's going to pivot away from the super easy money. We've now seen the name of the new man that is going to be in April, the head of the Bank of Japan. And the market is not buying that he's pivoting away very quickly. You don't need me to tell you that. You can see what's going on. Neutrality is right here, 74.07. That's where the market's at. In Bitcoin's had a heck of a week, up 14.21%. Let's give some credit due here. The market's been in an uptrend, and it accelerated, but I think big problems are right now in front of you. You've got the 200-week average in gray, the Bollinger Band. I think the smart money came out at these particular levels. In Brent versus WTI, you're seeing a market that is fighting a big-time battle at the 18-week average and the 100-week average. OPEC came out this week and they said for the year, they're going to adhere to the 2 million barrel a day policy of cuts. That was an interesting statement. February 17th, they're making a statement for the whole year. That got my attention. But the market's not acting bullish. It's rallied into resistance, hasn't gone anywhere. Will the market break through these lows and start a bear trend? Well, I have my doubts on that too. I think you're just caught in no man's land right here. WTI crude, higher high, lower low, no pattern, different than that. And I expect gasoline to whipsaw right here, not establish itself to a buy or a sell for probably another 2-3 weeks. And that's where the opening comes into the market, where I look for it. Where's that spring demand? Is the market going to start moving in and deploying money in anticipation of that spring demand? So that's where I'm at on those type of markets. Where you should be at is taking advantage of our president's sale. All you need to do is move your cursor to the top. It'll take you there. IraEpstein.com. Under the word research, it's there, 50% off. You can go for 1 month, you get it off for free. That would take you down to see my whole program you can look at in terms of the morning videos alone. for about $8 at 50 off. Of course, you get the better deal if you buy for the year, but that's up to you. So you can get these. You can get as low as about $4 to take a trial of either the futures by itself video or the ETF. And of course, the combination package, one of the best. I'm Ira Epstein. You have a great President's Weekend. There will not be any videos on Monday. I'll see you again on Tuesday. Enjoy the weekend.